Medical office building owners, a newer roof, not having a claim before, and low-risk medical office tenants can have you thinking the risk is low. But real estate is one of the highest risk businesses for large claims. Whether it be natural disasters, a fire, water damage from a frozen pipe, we see it all the time. In this video, I'm going to show you the exact coverages medical office building owners need before you start shopping for quotes, and I'll also give you some pricing examples. I'm Austin Landis, and I run a commercial insurance agency with real estate clients across the US. Insurance works very well for very large businesses because they have a lot of expertise and great insurance people at their disposal to help them avoid traps. I create these videos to give smaller and mid-sized businesses the tools and the resources to never get taken advantage of by insurance companies. There are so many traps and pitfalls that medical office building owners fall into on their insurance policy. They get hit with co-insurance penalties after construction costs jump up. They have to pay for code upgrades out of their pocket because ordinance and law coverage was taken off their policy. Water damage isn't covered because the carrier added an exclusion for it, and a million different things. On the liability side, the fine print can quietly pull the rug out from the policy and gut the coverage, like assault and battery exclusions that leave you hanging after a parking lot incident, or an animal exclusion that can turn a dog bite into your problem. Before you even look at the premium, make sure that you have a list of requirements that meet your objectives. There are too many things to review in this video, so I've included a checklist below that you can download detailing what coverage options you should have on your policy and what you should require out of any quote that you get so that you can make a more educated decision. The good news is that medical office buildings are one of the most desirable types of buildings for insurance companies to insure. You should have the options to get a really good policy in place for a really reasonable price. Here's my method for medical office building owners. I first secure the property coverage. It is the policy that is the highest cost and the most risky, and the coverage where a lot of the exclusions will be added so that claims don't have to be paid by the insurance company. This pays for property damage that occurs to a building that you own. For example, if a wildfire were to damage or burn down your building, this would be the policy that would replace it. I seek out a policy with agreed value, or it's often called a waiver of co-insurance, tied to the current replacement cost valuation of the building. I want ordinance and law coverage to cover the undamaged portion of a building, the demolition and increased cost to rebuild due to your city codes, and oftentimes an inspector will come and cause you to make upgrades to the building. I want business income or loss of rents coverage written so that you can maintain cash flows while the property is being repaired or replaced. I also make sure that we have an adequate amount of water damage limit. If I have to have it limited, which some policies or insurance companies require, I want it at least $100,000 or more. I make sure theft is included as a covered peril and not excluded. I want replacement costs on the roof if it's a newer roof, usually 10 to 12 years or newer. I make sure that the deductibles are not too large for the client that I'm talking to, especially the wind deductible. And I want to make sure the policy has equipment breakdown coverage. Once the property side is right, I then add the general liability, ideally with the same carrier as the property. This policy covers your premises liability. For example, if someone tripped over a curb and claimed that it's dangerous and they sue you, with general liability, this policy would cover it. Some of the exclusions are more difficult to get away from if you're in a higher risk excess and surplus lines carrier, but I keep an eye out for the following. Assault and battery limitations. If excluded, I try and add back some limit for this coverage. This is for altercations that happen on your premises that you are drug into the lawsuit for. Absolute liquor liability exclusions. Not good if you have any kind of restaurant or bar as a tenant in your medical offices. Once the property side is right, I then add general liability coverage, ideally with the same carrier as the property. This policy covers your premises liability. For example, if someone tripped over a curb and claimed that is dangerous and then they sue you. Once you have a good policy put together, I have a couple of suggestions. First off, instead of lowering the building value, increase the deductible. With underinsurance penalties, lowering the value benefits the carrier more than it benefits you. Your coverage will go down faster than the premium does. Increasing the deductible creates a more predictable claims outcome, and you will still probably be out of pocket less at the end of the claim. Next, Always require your tenants to have liability insurance and add you as an additional insured on their policy. If they don't have liability insurance, your policy will end up paying for all of their issues. Next is keep records of all the construction projects that you have, especially the roofing projects. Many policies will depreciate the roof if it is over 10 or 12 years old. Being able to prove that the roof is newer will come in handy if any claims adjuster claims that it's an older roof at the time of a loss. The next is watch out for protective safeguard endorsements that certify that you have certain protections on the building, such as a central station burglar alarm or a fire sprinkler system. If you accept the discounts from having these items, the insurance carrier will expect you to actually have them and maintain the systems. If at the time of the loss these systems don't work, or if you don't have them, the claim can be denied. If you accept the discount, make sure you 100% comply with these endorsements that are on the policy. And lastly, get a catastrophe model for your property. You should be able to get this from an agent in the real estate space, and it looks something like this. It puts your property through a risk modeler and tells you what claims are most likely based on the area that you are in. Real estate is one of the few industries where we regularly see catastrophic full limit losses. We have multiple open claims right now for this exact thing. A couple for tornadoes, some for wind damage. We had a fire completely burn down a $14 million building recently. It is completely random, but this means that you need a serious policy from a serious insurance company. The effort to find it is 100% worth it. I'm including a concise checklist below. Hand it to your preferred agent or carrier, and it'll help you have more meaningful and strategic conversations about your insurance. The price gap between strong coverage and hollow coverage is usually relatively small until the day that you have a claim. A quick word on pricing expectations and how to present yourself to the market. Carriers are going to look at construction and protection, like frame versus masonry and sprinklered versus not sprinklered, the age of the condition of the roof, the various HVAC systems, your tenant mix, the hours of operation, prior losses, vacancy levels, and their experience in your area. You can't change geography, but you can document upgrades, show a leak response plan, keep service records for alarms and sprinklers, and validate your building limit with current data in the area. That's how you earn better terms without sacrificing the coverages that we just locked in. Here are some real pricing examples of medical office buildings in the US. The first is a coastal Texas area with the building value of $1.3 million. They have a loss of rents coverage of $111 and a GL limit of $1 million. The property deductibles are $10,000 with a 5% wind hail. The annual cost of the policy is $11,942, and that equates to a monthly cost of around $995 a month. The second is in the state of Georgia with the building value of $567,000 with a loss of rents coverage of $110,000. They got a GL limit of $1 million with the deductibles of $2,500 with a 1% wind and hail. The annual cost of this insurance is $2,547 with a monthly cost of around $212. And lastly, in the state of New Jersey, we have a medical office building insured for $1 million with a loss of rents coverage of $42,000. They got a GL coverage of $1 million and the property deductibles are $2,500. The annual cost for this building is $5,373 with a rough monthly cost of $447. If you're a building owner and you want your insurance handled the right way, grab the checklist below and start a quote on our website, or use the link in the description below to schedule a time to talk with me. My company has a team that just does commercial real estate, and we can help you get the right policy.